Once again, good evening, everyone, and welcome to this webinar. Uh, Century Financial is here presenting World Investor Education Week. And I see a few people have issues in terms of network, and there are some connection problems. Please rest assured, in case if you miss this session or you're not able to connect or not able to hear my voice properly, we are going to upload this webinar on YouTube as well. You can see it there. And if you have missed anything out today, just talk to your relationship managers and we can have a one-on-one training session on Zoom or in the office. And we'll again explain you what we discussed today. So the very purpose of this webinar is going to be first and foremost spreading awareness to a lot of investors about asset classes, what kind of financial instruments are available to invest, how to manage your risk, what kind of news and events are in the market, and how they impact the prices of shares and commodities and metals. And then we'll learn a bit about technical analysis also. So let me just introduce myself. My name is Yogesh, and I'm a global investment strategist here in Century. I've been a part of this company from last 8 years now, and we have done a lot of seminars and a lot of webinars. And the focus of each seminar or webinar has always been to spread awareness about the financial markets, to share new investment ideas, new investment opportunities. And we have done a lot of topics, especially since April. When the lockdown started, we started webinars on crude oil. We started webinars on how you can be at home and can yet invest into different asset classes. We did a lot of sessions about earnings in stocks. We conducted an investor education week as well. We talked about gold outlook. We talked about pair trading strategies, market neutral strategies. So we have done a lot of sessions, and each session has been unique in its own way because we try to cover those topics specifically for the remaining time. Now I see there are a lot of people have joined, and I see a lot of fresh names. I see a lot of people who have attended my webinars before, and a couple of them we had one-on-one training sessions as well. So welcome to all of you, and I hope then in the next 1 hour I'll be able to do justice with the time which you have given to me to speak about this entire topic. Now, before we start, uh, let me just start with a poll. I always do that just to make sure that there is enough interaction, because there will be times when you will have some questions in your mind. Now, I have done a lot of seminars, and normally I would encourage people to ask questions while they are there. But since we are here through chat option, the chat option is available to you. If you have any questions, please write it over the chat. Throughout the session, I'll be trying to answer, and let's hope that all your questions are answered. Something which I'm not able to answer, don't worry about it. I'll definitely be in touch with my consultants and get back to you with the proper answer in case if there is something which I'm not aware about. So please do not stop writing the questions. Let me start with this poll, and then I'll just explain you how this whole week of investor education will be divided. So I have just published one poll. Please take out time and vote. Where do you invest? And there are all these options, and there are options of mixture also. There is an option which says no investment, and there are different asset classes. Please see, start your poll and see all the options. Okay, votes have started. Okay, okay, okay. I'm getting a lot of options. Please continue, continue. That's good. So I can have a fair idea of where do you invest. and this will help us out to understand the investor psychology also, because there are a lot of instruments. So today, while you are doing the polls, let me explain you how World Investor Education Week will be segregated in the next 5 days. We have designed individual topics for each specific day. Today, we will just discuss about different kinds of asset classes which are available for investment. Why do we invest? What's the purpose? And where do we invest? The risk on the risk basis, which is from the highest risk to the lowest. um, we will also see the investment pyramid, which explains us that how from the very bottom to the top, the risk and reward of an asset class increases. We'll talk about how much a specific asset class moves in a day. That is something which is a lot of people have asked this question before. Like gold, for example, how much gold moves on daily basis, how much a currency moves on daily basis. So we'll try to get as much as product information and product range, what we call it. Okay, perfect. So I have another 5 seconds before I end the poll and declare the results. So 5, 4, 3, 2, 1. So I'm going to end the poll now. So if somebody has not voted yet, please go ahead and vote. Perfect. So I don't know how many of you can see the results. Can anybody see the results? Just give me a yes. Plus, if you can hear me, please, if you can hear me properly, give me a yes. I see a lot of people have connection problem. A lot of people have networking issues. Please, please check if you can hear me. Just give me a okay. Okay, I got one yes. Okay, okay. Okay, now everybody can hear me. So I think it's a very used, very common software, Webinar Jam, which is used for all the webinars. And these days, since every event is a virtual event, so please let's try to just coordinate among ourselves. If you miss anything, we'll try to again cover it later on. Meanwhile, if you have any questions, you can ask. So I have shown you the results of the poll. And as per the results, we can see 36% of people have invested in gold, while 18% has invested in share markets. And I'm not going to ask which share markets. It can be somebody invest into Indian markets, Egyptian markets, respective countries where they are from, or somebody invest into global market as well. I just want to understand that which asset class you're more familiar to. Good to know that nobody has selected a no investment, because the worst kind of risk you're facing, you do face risk in each and every asset class you invest. Even if you do a fixed deposit, there is a slight chance that you might, if you have done a fixed deposit and if your bank goes bankrupt, then you have no money. And the possibility of that happening is rare, but it is always a risk. So no investment is here without a risk. But the biggest risk you take on your money is when you don't invest. Always remember this. If you're not investing, then you're definitely losing the value of money. If you're investing, then you may or may lose the value of your money. But if you're not investing, then you're definitely losing your money, because slowly and gradually things start becoming expensive, and the money which you have right now may not be enough for the future, right? So I see that 45%, which is majority of people, have put mix of everything. So it could be mutual funds, it could be a mixture portfolio, like great diversification. So that's a really good sign for those who are doing a mixture of everything, and that's really nice. So, the idea of today's session is very simple. Uh, how we are going to divide this session: for the first day today, we are going to discuss about only the asset classes and the financial instruments which are available to you. We'll go a little deep, try to understand how it works, what are shares, what are commodities, what are bonds. And then we'll tomorrow when we'll meet, we'll talk about risk management. Tomorrow we'll understand on our live platform that how you buy and sell in the live market, what is margin trading, what is short selling, how you can take advantage from the falling prices. That is also something which we'll be able to check. And then the day after that, we'll focus on the important news and events which affect the markets, earnings, Donald Trump tweets, pandemics, Brexits, trade wars. What does it mean for the market? How equities and commodities get impacted? And then we'll also learn some charts, technicals, graphs, what kind of technical studies are there which you can use to enter and exit from your trades. And on the last day, which is Thursday, we'll trade live in the Forex market. So by then, you will be aware about how to use the platform, what kind of asset classes are available, how you take a trade, how you manage your risk, what kind of news you need to see, what kind of technicals you need to put. And all this is going to be stretched over till Thursday. Now, on Thursday, you will trade live and you will see for yourself that how diversification and a proper portfolio allocation helps you in minimizing your risk. So this is something what I aim to do. I see around more than 15, 20 people. I would request them to continue doing this session in the evening. Just to inform you, last day, which is Thursday, we'll do this session 5:30 onwards because US market opens at 5:30 p.m. UAE time. So we'll do that. The relationship managers will call you and definitely inform you about this. Now, we are going to start with the session. As I said, please, if you have any questions, do write on the chat box and I'll try to answer them as much as I can. Um, the very essence, as I said, anywhere you invest, there's going to be a risk. And first, I want you to understand that by doing this session or attending this session, it is not necessary that wherever you're going to invest, you're going to make money. This session is to inform you, spread awareness, discuss more strategies, ideas, insights. But at the end of the day, the returns are always subjected to the market risk. The advertisements in the TV are there for a reason. So please understand these investments carry both the faces, profits and loss. And there is no guarantee or assurances that you're going to make money or you're going to make profit. This is just for your information to begin with. Now, when we talk about investments, why do you invest? This is one simple question. We are talking about investments. I'm sure everybody is here for one or the other reason. Why do you invest? Write it over chat. I used to do a lot of seminars and it used to be very interactive, but since webinars, we barely can talk. Please write it over the chat. Your individual reason that when people tell you to invest, why do you invest? What makes the margin of a broker less, more capital to invest, or less trades? Okay, there is a margin related question. I will answer it before I finish. I might need a bit more explanation to it. But let's focus on the complete question here that why do you invest? There are more than 20 people here, and uh, I'm sure you all have your reasons. Why would you invest? Why you want to go through this whole risk? Okay, somebody just said for the future. Hmm. What else? What is the purpose of investment? You're putting this money. So what happens if you put money? What is your expectation? What will happen to your money? And if you don't invest, then what is it which you're missing out on? What is this one factor? Why would you invest? Go ahead, guys. Chat. Try. Okay. Financial freedom, no risk, no opportunities, uh, to grow the value of my savings. Brilliant, brilliant answer. All these answers, brilliant. Financial freedom, one of the brilliant answers. Financial freedom means that when you invest, you expect a certain growth in your money, and that growth should continue. So by the end of your working years, you don't have to rely on anyone. A very straightforward answer. We invest to make money. Absolutely. So why there is this need to make money or grow your money? You're working, you're doing your business, you have an inflow of coming, but you would still invest to grow the value of your savings or to achieve this financial freedom or to attain those opportunities and take the risk. Why? The reason being, One of the most important reasons being inflation. Inflation is something which basically the value of your money, which is today, it is going to get eroded over a future course of time. So when we say if you're investing right now, you want first to beat inflation. And so consider it this way. I'm sure there are so many people, uh, and you would agree with the point. If 8 years ago you could buy things worth 100 dirhams, or let's say 8 years ago, I'll talk more into Indian rupees, what my experience is. I came here 8 years ago, 9 years ago, and I could feel this way that when I was 20-year-old, my salary was 5,000 rupees. Now, 5,000 INR, that time when I got it, I was like, oh, what I'm going to do with this kind of money? Because it was still 5,000 rupees was too much. Back in 2008, 2009, and 2010, it was a decent amount, 5,000 rupees. What I'm going to do with it? And now when I go to India, 5,000 rupees is something which you go out for dinner, you go out with friends, and it just gets spent. So what happened from there to there? 5,000 is still 5,000. But things became more expensive. Eating out became more expensive. Food, clothing, everything became more expensive. And the value of your money keeps getting eroded, which means, let's say you have 100,000 dirhams right now, but if you don't do anything with that 100,000 and you keep it under your bed, possibly in the next 10 years, the 100,000 dirhams will not have the same value which it has right now. So by not investing, you are definitely going to lose out on the value of your money. You will have your cash, but the value of that cash will not be the same as it is right now. So inflation is one major reason that why exactly people they invest, right? They want to grow the value of their savings, because if you have 100,000 dirhams in the bank account now, maybe after you retire in the next 30, 40 years, that 100,000 will not be able to, it will not be enough to cover your expenses. So that's why people invest. Now, just to read it, in the inflation refers to the rise in the prices of most goods and services of daily or common use, such as food, clothing, housing, recreation, transport, consumer staples, etc. It measures the average price change in a basket of commodities and services over time. So, fast forward, what we understand is inflation is something which we have to beat, and for that, we need to invest. So, comes the next point, that now when you know that why do you invest, where do you invest, where you should invest, or where do you invest? Now, the question of where to invest is directly related to the fact of risk and reward. Where do you invest? If you invest into stock market, if stock comes down, you lose. If you invest in a house, you buy and you invest into a house, but something like 2008 happens, the value of your house also comes down, right? So where do you invest? You invest in places where you want to get good returns, but with good returns. So let me show you what are the areas of investment, and I will discuss asset classes separately. Let me show you, as an investor, what can be your options. So this is something which we call it as investment pyramid. I showed you a disclaimer in the very beginning, which and I told you that whatever I'm discussing it with you, it's for information purposes. It is something which you should know, and obviously you can, once you understand the risk behind the investment, you should always go and properly understand the risk and reward. But to understand first and foremost where to invest, now, if you see why there's an investment pyramid, or why a, a triangle, the point of having a pyramid is the pyramid has a base. Now, this is the base of your investment, which means first and foremost, what you do, you make some money, you earn some money, and you save a part of it, and then you spend a part of it. What happens if the moment you get your salary, do you spend all of your salary? Most of you don't. Because you are being told that whatever is the portion of your salary, a part of this will be your expenses, and before that, a particular portion you have to save. So why do you save? You save for your rainy days in case if you need money later. And I think in UAE specifically, everybody should have an emergency fund. One thing, guys, which pandemic taught us was the importance of having an emergency fund. If we don't have that emergency fund and whatever money we are getting, we are just spending, and we are the expenses and the expenditure uh, in such unwarranted times and which is not accounted for, it is not something which is right. And I'm sure there are people who must be more experienced than I am at this area, but I'm sure there are a lot of people who are not as experienced, or a lot of students and college grads, they are also here in this webinar. So I would like to tell them also the importance of an emergency fund is uh, something which you should not neglect. You should have a percentage of funds kept aside or kept somewhere safer, so that not just rainy days but rainy years can pass by. When the lockdown happened, so many of our friends, brothers, relatives, they went through a very hard time. Salary cuts, um, job loss, uh, layoffs. This was something which was never even thought, but it happened. So during those times, you really need that kind of emergency fund. Now, that's where the base of the pyramid is formed. Before you invest anywhere, you need to have uh, you need to be invested. So somebody just said, to be honest, private sector is dangerous. See, when there is a virus at large, every sector is dangerous, whether it is public sector, private sector. Yes, I mean, private sector would go for job cuts to make sure that the profitability is not affected, and there are a lot of private sectors which did layoffs. But the point of this conversation is that if you have a certain amount of cash or your savings kept, then it really helps you out. If you have an emergency fund, it really helps you out in panicking times like this, right? So that's where the base of your pyramid forms. Before you invest anywhere, you need to understand that you need to have your life insurance. You need to have a savings account where a certain amount of cash is there, because you do not take a loan for investment. You don't take a loan and invest into stocks. You don't take a loan and trade with currencies. You don't take a loan and invest into blue chip stocks. Taking a loan and investing is thinking like, okay, I'm going to invest in this, I'm 100% going to make return and then pay this loan back. That's not how it works. So please, first you form a base. Now your base of the pyramid, if you see at the bottom, number 4, that's your savings accounts, investment into bonds and insurance, and I'll explain you how bonds work. But insurance, for example, everybody should have a life insurance. I mean, if you're married and if you have a kid, insurance is something which you must have at unwarranted times like this. Then once these needs are satisfied and you are done with it, you move on a bit. Start investing into high grade municipal bonds or fixed income securities. So you invest somewhere where you are getting a certain amount of fixed income, for example. It could be a government bond, it could be anything, but you are getting a certain amount of fixed income. You move on, and then you start investing into real estate, blue chip stocks, different kinds of shares you want to invest into. And then at the tip of the pyramid, as you can see, you can trade in currencies, trade in commodities, you can do day trades, you can trade in options, etc. So for those people who want to trade right away, please make sure that at least the base of the pyramid is there. I mean, you may invest into bond or not, that's just one thing, but the base of your pyramid is really important before you reach to the tip of the pyramid. Now, if you see, there's an arrow which is starting from the bottom and goes towards the tip. Now, what does this arrow indicates? I have not mentioned the label of the arrow intentionally. I thought I'll ask you guys, what do you think this arrow indicates from the bottom to the tip? I mean, of course, it's the direction of how the pyramid is formed, but what does this arrow stands for? What is increasing from the base of the pyramid, 04, 03, 02, and then 01 at the tip? What is it which increases? Keep typing, guys. Keep typing. You have your chat options open. Let's make this more interactive, and let me ensure everybody understands everything. What do you think this arrow signifies from from the bottom to the top, when the arrow goes up? What is increasing? Okay, investments are increasing. That's one. Okay, okay. The risk. Okay, is it just the risk? It is also the reward. So what you see from the bottom, if you invest your money in a savings account, you may not get that much amount of money, but it is relatively safer than investing into a real estate or stock markets. Because now what is happening is, from the very base of the pyramid, when it goes up to the speculative bonds, or to the trades, options or futures. So from the very bottom, from your savings account, which is rare, least risk, if you invest into 03, which is your bonds, the risk increases, right? Because your bank is still established. But let's say if you invested into bonds, Venezuelan bonds have gone defaulted. So it is, bonds are not completely risk free. Even the best of the government bonds can also go default. And then you move a bit, you talk about blue chip stocks. Stock markets have the risk. A lot of people, they think that if I invest into stock markets, I will be the wolf of Wall Street. That's not how it works. I'm sure there are a lot of movies, you see a lot of movies, and somebody invested into shares, and the shares went overnight and you made a lot of money. I mean, there are a lot of stories, but not necessarily that every time this is going to work. So share stocks, they have the risk. Real estate, um, a lot of people have doubts about real estate. They think that if I buy a house, then whatever happens in the economy, it doesn't affect the house, the value of my house. Please, that is not right. 2008, the crisis, the recession started with the falling of real estate prices. It was the real estate bubble which happened. So don't think that real estate is one of the most safest. It's illiquid, first and foremost. I'm sure everybody must have seen UAE real estate market. People who purchased at 2012 have been selling things at 40%, 50% lower. So real estate also comes with a lot of risk, and that's why I've put him number second, at right next to the blue chip stocks. And then at the tip, the most riskiest, we are talking about commodities, we are talking about speculative market trading, etc. And that comes the high risk, high reward strategy. So please make sure that you have enough base before you invest into any of these areas. Now, let's try to understand in a bit detail. Please, guys, if you have any questions, keep writing. I'll try to answer these questions from whatever we are discussing. So, what you saw in this pyramid, these are asset classes. Where do you invest? You invest into asset classes. And what is an asset class? So, we're talking about a group of securities who have a similar characteristics, behavior. So, for example, if I talk about commodities, then commodities will have a group of financial instruments which will have similar kind of characteristic and behavior. uh, Different classes or types of investment classes are grouped together based on having a similar financial structure. So, for example, if I tell you commodities, commodities can be energy commodities, commodities can be on the basis of metal, can be on the basis of agriculture, right? But the structure is same. The behavior among the marketplace, if it is speculative, it's not that energy is not speculative, and metals are. So that's why commodities will be separate, forex will be separate, stocks will be separate. But these all uh, instruments which you see, these are your asset classes. These are separate group of securities, right? It is not just one financial instrument. Now, starting from the very beginning, let's look at stocks. Please remember this. After this, whenever we use so somebody just asked me about basket. So basket means same class, different companies. So basket, I will also discuss the basket. Let's discuss this one by one, and then we'll move on to all the other asset classes. What I will also be doing is, while I discuss this here, I will also take you to the live trading platform. Today's Sunday, so the markets are closed, but I'm still online on the platform just to show you the layout and how to use the product library and see all the financial instruments. So let me discuss it over here, and then we'll go to the platform. Now, first to start with stocks, please remember this: shares, stocks, equity. Whenever you hear this word, it just means share market. There are technical differences among all the two, three terms, but to make things easier for you, when people say global stocks fell, or global equities went up, or global equities fell, or when they say global share market is down, emerging share markets are down, emerging shares, it just means share market. So stocks and equity for now means the same thing. So wherever you read global equities or global stocks, it means the same thing. Now, uh, three important features what you see in shares. First, the ownership of a corporation. So when you basically buy, what a share actually is. Now, very quickly, I'm going to describe the very nature of the share. One question is coming from the investment pyramid. When you say emerging market stocks in the top of the pyramid, does that include China? It can. So when you say emerging markets are the markets which have not grown fully. They're not fully developed. So China is still a growing market. So yes, whether even if we talk about Indian markets, it's a growing market. So yeah, emerging market, even Malaysian markets, when we say that these are the markets which are emerging markets. So yes. Now, understanding again what shares are, when companies, so there are few concepts. People talk about IPO, initial public offering. What is an IPO? When companies they issue shares in the public, and issuing shares in the public means the companies when they become bigger and they want to expand further, so to obtain the capital or to have that kind of money, because if they borrow that kind of money from a bank, they will end up paying a lot of interest over the period of the time when they have borrowed, because the capital stays in business for the entire life. So if a business has been started and they borrow all their money from the bank, or all most of the capital from the bank, they will end up paying a lot of interest, which will reduce the profitability. So what they do, they look for business partners. Now, if they look for business partners, let's say I come and I have 10 business partners, then the control of my business is on all those 10 business partners. Like now the control is diluted. So, what I want here is a mix of debt and equity. For equity, now when I'm seeking more and more business partners, what I do, I said, here is an idea. If I need $1 million to expand my business, how about if I go to 100,000 people and tell them to invest $10 each in my company? So when these 100,000 people will invest $10 each, I will get my $1 million, which is the total market value. And those 100,000 people are 100,000 shareholders now, and the share price is $10, right? So to understand how shares work, when you're buying a share of a company, you're kind of investing, you're becoming a business partner or an investing partner into that company. If you're buying Facebook shares worth $10,000 and you're giving $10,000 and acquiring Facebook shares, that means you are a shareholder in Facebook. You get a part ownership in Facebook. That doesn't mean that you get up in the morning and call yourself Mark Zuckerberg, but it does allow you to enjoy the benefits in the company. And when I say benefits, that means the last point which you can see, that there are many companies which give their shareholders dividend payouts. So, guys, there are two ways you can make money by investing into shares. One is the capital gain. Now, how capital gain works? If you bought a share, let's take example in if you bought Apple shares in 1999, it, or let's say Amazon shares for example, a few years ago it was $400 per share. Now Amazon shares is $3,500, right? Let's see a live chart for this. Okay, I'm going to share my screen here. Great. So I hope everybody can see this platform. So I'm just going to show you Amazon. The current price is 3287. So a very simple chart. Let me take this. Okay, right here. So right now, let me increase the size of the text so everybody can see this. On the right corner is the price, and on the left corner is the time. So if you see 2017 April, the price of Amazon share was $950. This was in 2017, 25th April. Fast forward, again 25th April 2018, from 950, the price of Amazon went to 1450, right? Fast forward 2019, from 1450 it went to 1850, and then April 2020 it was 2800, and then September 2020 it was 3500. Now from $900 to 3500, if you bought the stock at 900 and you held it for 3500, what you gained is an increase in capital. So this is called your capital gain. That if you bought a share, you invested $900, and now if you sell this share and take your money out, you will get 3,500. So basically your capital grew. This is your capital gain. It can be a capital loss also if the price would have gone down below 900, right? So capital gain or capital loss, that's one way where you can where you get money from shares by investing in shares. Another thing, let me quickly switch back to my presentation. Another way you can make money in shares is by getting dividends. Now, what are dividends? A share price from $900 went to $3,000. That's your capital gain. It could have gone down, it would have been your capital loss. Dividend is more like a fixed income, which the corporates they declare. So if a company has made $15 billion worth of profit, and they think, okay, we have decent amount of profits, let's declare a quarterly dividend, which means from $15 billion, let's say they are ready to distribute $5 billion as dividend, which means $5 billion as dividend. If the total shares are 100,000, then you divide the amount and you will be able to see what much. So every company has a certain amount of dividend. So not every company, basically there are some companies which distribute dividends on quarterly basis. So US companies, European companies, UK based companies, there are a lot of companies which, and it is very easy to find out that which are the companies which are declaring dividends. So I'll give you one example. Let's say, for example, if ExxonMobil is declaring 90 cents dividend every quarter, and if you have, say, for example, 1000 shares, then you multiply 90 cents by 1000, you're making $900 profit. $900 is the money which you have received through dividends, right? So this is on quarterly basis. Most of the companies they do this on quarterly basis. Somebody just asked me one question, dividend related. Should we hold the stock up to 1 year to be eligible? So most of the US companies, very good question. Most of the companies, they have, especially US based, they declare dividends 4 times in a year. Okay. So if you want to get the entire cycle of dividend, so if Exxon declares $3 in a year as a dividend per share, that means every quarter they are declaring 90 cents, 90 cents, 90 cents, like that, or 87 cents, 87 cents. You can be eligible for holding the stock for that quarter and you will get the dividend. But if you do not, like if you buy a share and you receive a quarterly dividend and then you sell it, then you will not get dividend for the rest of the year. If you want to hold this, if you want to get the complete dividend cycle and you want to have entire $3 as a dividend, then yes, you have to buy the stock and hold on to it for the rest of the year till you cover all the quarters. Okay, there will be Q1, Q2, Q3, Q4. Every 3 months you will be receiving a dividend. By any chance, if you close your trade in the next 2 months, you will get dividend for those 2 quarters, but the remaining 2 quarters you won't be receiving dividend. So there is a ex dividend date, guys, which comes out. Till that particular date you have to hold on to that stock, and that ex dividend date is every quarter. So it's not like if you buy a stock and you receive 1 quarter dividend and you closed, so that dividend will be reversed or anything. It's on quarterly basis. It's up to you. If you want to have entire 1 year of dividend, then you have to hold it for that particular year. There's a strategy called dogs of Dow which revolves around such kind of investing style, and of course when we have one-on-one sessions I'll discuss about that as well. One more question was asked, that does this affect Nasdaq during the corona pandemic? Does it affect Nasdaq during corona pandemic? What exactly affects during corona pandemic? Please, if you can specify the question. Another question: what if the stock value went low and the trade closed due to risk measures? Yeah, if the trade is closed for any reason before the ex dividend date, then you're not eligible for dividend for whatsoever the stock get, whatever the trade, whatever reason the trade gets closed to, right? So shares, in shares you get two kinds of income if things work in your favor or if the company is ready to distribute dividends. One is your capital gain, where the share value goes up and you make money. If it goes down, then you lose. Another is dividend, which is a quarterly distribution by the company. If you are holding 1,000 shares and 90 cents dividend is declared, you make $900, right? If you're holding 100 shares, similarly. Does the pandemic affect the stocks of Nasdaq? Very good question. Somebody asked me about pandemic affects the stock. I will answer this once we end this session. I'll definitely answer this, and I'll show you a couple of charts, and that way it will be. Please remember this. Ask me again. I will, before this session ends, I'll answer this question. So moving on. So this is how stocks work. Now, next asset class is commodities. Guys, I'm just explaining you over here on the presentation. I'll take you to the live platform and show you the product library and where you can find these asset classes on the product library. So commodities, when we talk about, there are different kinds of commodities. A very basic good used in commerce that is interchangeable with other goods. They're used for production. They're used for goods, services. There are industrial based commodities. There are energy based commodities. So what you see also next to the commodities are different kinds. First kind of commodity is energy. Now, energy, we are talking about fuel, crude oil, natural gas, heating oil, all these kinds, gasoline, for example, all these kind of energy products, they are called commodities, right? They all have a lot of fundamentals and technicals on which their price relies, something which throughout this week we will try to learn and understand. For now, you need to understand what commodities are. So, first type of commodity which you will find in your product library or where you can invest and trade into is energy commodity. So, crude oil, natural gas, heating oil, gasoline. Let me quickly show you the energies part here on the platform. Right here. So this is your product library. First thing is here commodities. So when you click on commodities, you will see energy right here. So now you can see different kinds of crude oil. There is gasoline, there is energy index, heating oil, low sulfur gas oil, natural gas, and you can see all these commodities listed in your platform. So this is the platform over here is designed in such a way that it's very easy to navigate among different asset classes. You can quickly search, you can go to the product library and filter out with the help of a lot of options here. So this is your commodities section. First section is your energy, and second, let me just take it from here itself. Right. And then comes the agriculture based commodities. Uh, Please, guys, understand this also. Agricultural commodities, this is a very important point. There have been last few years, whenever different economies have seen recession, so many times we have seen that one asset class which has constantly outperformed is agricultural commodity. So, grains, soybean, wheat, commodities, the agriculture commodities can be divided into hard commodities and soft commodities. So, what I'm talking right now, what I'm showing you right now, is the hard commodities like wheat and soybean and corn. If you see, there are soft commodities, second last, there is coffee, sugar, orange juice, cocoa, etc. And then there are live cattle and lean hogs, which is also in part of agro commodity and which can be traded. So you can actually trade coffee and coffee both, coffee Arabica, coffee Robusta. There are two kind of coffee beans. Even the Starbucks which you drink could is between them, could be coffee Arabica, could be coffee Robusta. So these all commodities are available. There are a lot of people who speculate the prices on daily basis, who invest into coffee and wheat and corn and soybean and agro commodities. One thing, we had a separate session on this about seasonality patterns. The investments in agricultural commodities depend a lot on the seasonality of that crop. So, in the coming few weeks, we'll understand. In the coming next week, we'll understand that how seasonality is really important for the prices of corn or wheat or oats and rice, sugar. How seasonality affects the prices and what kind of strategies we can build around this. Then there are metals which you can invest or trade into, and metals are so there can be precious metals, there could be base metals. So precious metals are your gold, silver, copper, sorry, gold, silver, and platinum and palladium. Now, base metals are your industrial metals. Industrial metal, which is used for manufacturing, which is used for industrial application, which is copper. Copper is heavily used for industrial application. Why precious metals are called precious metals? Because their occurrence is very rare. Gold is not that easy to mine. You cannot just go to any mine and start mining it and get it ready in the next 2 days. So that's why we call them precious metals. So gold, silver, platinum, palladium, these are your precious metals which you can invest or trade into. And then copper is your base metal. So these are different kinds of commodities. Now let me show you a view on the platform for the same thing what I just discussed here. If you go to this platform, product library, this is your library. You go to commodities, and then commodities, you can search out different sectors. So I just wrote energy. Now let's say if you put agriculture, you'd be able to see commodities like cocoa, coffee, cotton, lumber, orange juice, rough rice, soybean, and you can also see wheat, different kinds of sugar, and all these instruments you can buy, sell, invest. There are consultants over here who can update you about the current trends in these instruments and current more and more information about this. Then uh, precious metals, when you click on the energy on the commodities, gold, palladium, platinum, silver, right? So these are the commodities. Now coming back, so what we'll do is we'll understand all the asset classes first, and then quickly we'll answer some questions, and then move on to the platform to understand how much they move, right? So it will be easy for us to understand their trend in the future. Next asset class, what we are going to discuss, forex, the most dangerous, the maximum traded asset class is forex. Now Forex is exactly what you think it is. We are talking about currencies. So you must have heard about Forex trading. You must have heard about Forex trading companies, Forex brokers. Forex is just one financial instrument. So many people, they think, many investors, they think that online trading is all about Forex trading. Forex is just a part of it, but it is very important part of it. In day-to-day speculation, if you see daily trading volume which comes from Forex market, as you can see on this slide, $6.6 trillion. And that's huge. That's more than futures market. That's more than stock markets. $6.6 trillion of transactions have happens every day. This is daily trading volume. Since 2016, this volume has increased by 29%. And not to tell you, currencies are high risk asset classes. So if you're trading, if you're speculating, investing, please understand that this is one of the most riskiest asset class you are trading or investing in. So somebody just wrote here that I don't like Forex, made me lose my 5 year savings. Terrible, absolutely terrible. And I hope that sooner or later, uh, the lesson which you have learned is exactly my point, that these are high risk asset classes. So you really, really have to understand what you're getting into. Because what happens, I will show you an example of what I'm telling you over here. So on, I'm just showing you currencies over here. Let's take pound, and let me show you the trend for GBP. Now I will take you to 2016. This is 2016 right here. Everybody's available on chat. Everybody can see this chart. This is GBP USD. Somebody wants to know more about Dow Jones. Uh, don't worry about it. We'll discuss more about each asset classes. Let's discuss everything first, and then I'll answer more and more questions. So don't worry about it. I'll tell you how. We still have stock market index to figure out. So that is one asset class which is remaining. So we'll talk about Dow Jones and Nasdaq all. Right now, you see the chart of GBP USD. I have taken this. Um, Let me move my cursor. If you can see this one, 2016 June. Any guesses what happened in June 2016 for UK? Please write it on the chat. 2016 June, 2016 November for US, that was elections. What happens? What happened in 2016 June? Was a very big event, and UK was involved in it. Any guesses? Please write over the chat. Okay, I got one answer. Waiting for more. Please, everybody, just think about it. Think 2016. Okay, okay, exactly. I think everybody is very much aware about what happened in 2016. Brexit the Brexit referendum was taken in 2016, and it was decided that UK will be leaving the European Union. It was a very low margin, 48 to 52. Not exactly what we call a majority, but those were the numbers. And UK exited from the European Union 4 years later in 2020. So, if you can see, had you invested in 2016 and let's say bought pound thinking that over a period of time it will grow, pound has still not gone back to 2016 levels, which means had you bought pound 4 years ago, 5 years ago, you would be keeping that money. It's not, that investment is not even at break even, and you are still at the lowest. So, and there is no possibility whether pound will go up or down. We don't know about it. So currencies move on everything. Currencies move on Brexits, on pandemics, on trade wars, elections, every major or minor data, it affects the currency of that particular country, whether it is imports, trade balance, industrial production, GDP, factory orders, unemployment claims. Every economic data to every major event will affect the currency. Central bank decisions, not to mention. So, when you are trading or investing into forex, please be very careful. Just one thing which I wanted to show you here, for those who have not traded in currencies or have a slight confusion of how currencies work, very quickly I'm going to look at this pair, GBP USD, which shows 1.3037. Now, in very layman terms, for those who are looking at the currency for the first time, a currency pair has a base currency and a quote currency. So when you look at GBP USD is equal to 1.3037, that means that 1 pound is equal to, if you want to purchase 1 pound, you will have to pay $1.3037. Okay. If you have to purchase 1 pound, you have to pay $1.3037. Now tell me one thing, if GBP USD is 1.40, is pound getting stronger or weaker? Type your answers on the chat. If GBP USD, which is 1.30 right now, if it becomes 1.40, is pound getting stronger or weaker? Let me just quickly make poll out of it. So if GBP USD is 1.30 and goes to 1.40, pound becomes stronger or weaker? Okay, please vote. I think voting is the better way. A lot of people gave answers. I request, please, if you can vote now, so it will be much clearer. Okay, still have a good amount of crowd here. It's been an hour, so I hope that you're really enjoying this session. Okay, next 5 seconds before, and I want everybody to vote to make sure that everybody understands this. Okay, last 10 seconds. 5, 4, 3, 2, 1. Okay, I'm going to end this poll. 75% of the attendees said that pound is going to be stronger if it goes from 1.03 to 1.40. 25% of you said weaker. The correct answer is stronger. If 1 pound you buy and you pay $1.30, and if it goes to 1.40, which means now to purchase the same pound you will pay $1.4. That means pound is getting stronger, you are paying more dollars to purchase the same GBP, right? GBP is Great Britain pound. So the first currency GBP and USD, the first currency GBP is your base currency. So if GBP USD is 1.30 and if it goes down 1.1, that means now to purchase the same pound, you're paying less dollars, which means dollar becoming stronger and GBP is becoming weaker. So like this, every pair which you will see, every pair of currency which you will see will be quoted like this. Again, over a period of next few days, we will do this activity, and every day we'll do these polls so that you get the hang of it. Now, coming back, so currencies is one thing, and quickly moving on to the next asset class, which is share basket. Now, somebody asked me a question about share basket, that what share basket is. Share basket, these are your mini portfolios of stocks, and they are very theme specific. So now you know what are shares. Shares are of a company, right? So there are different companies and they issue shares, which means they invite people to invest into these companies. So individual companies have shares. When I say share basket, which means that a basket where shares of different companies are combined together. So they pick different themes. Like, for example, I have put on this slide a few themes: streaming, artificial intelligence, gaming, renewables, social media, oil and gas. uh, all these themes, there are baskets created for individual theme, and all the companies which are related to this particular theme are put into that basket, and the value of that basket goes up and down on the basis of the performance of the companies which are into this particular basket. So let's take an example. If I talk about social media basket, you have your chat option. If I talk about social media basket, what companies shares must be into this basket? Which companies do you think will make it to social media basket? Come on, guys, social media basket. Which companies can make it to social media basket? So one share basket will have a specific theme, and the companies related to that theme will be in basket, and the way they perform in the basket, the value of the basket will move up and down. So okay, I got one company. Okay, what else? Somebody said Facebook. Which other social media company do you think will be in this basket? LinkedIn, Snapchat, Facebook. Yeah, and also, guys, see, there are a lot of benefits when you're trading in basket. So we'll go through different concepts of risk management, and one of them is diversification. Diversification means spreading down the risk into different asset classes. Now, when you're looking at the baskets, uh, when you invest into an individual company, let's say, and this is a very common example. If you have invested only into Facebook, now of lately, Facebook, if you see last year also, Facebook was in too much controversy because of the Cambridge Analytica scandal, that a lot of data was harvested and to rig the elections. So Facebook stocks came down. But if Facebook was just a part of the social media basket and you had invested into the whole basket, then you would save yourself from that individual concentrated risk, which otherwise you had if you bought only Facebook. So that is also one of the benefit of the basket which you can do it. So share baskets primarily reason is to diversify and reduce the risk on an individual stock, right? So most of you said right. Facebook, Instagram, Google, all these kind of companies, they will be into the share baskets. Now, next, bonds. Now, bonds are fixed income instruments. There are a lot of investors who invest in bonds these days. Interest rates are very low, so there are less investors. But how bonds actually work is very simple. When you borrow a loan from the bank, what happens? You have a fixed maturity, that at this point of a fixed expiry date, that by the end of this date you have to repay your loan, and you have to pay a certain amount of interest. So when you take a loan from the bank, this is what you do. Imagine when you give a loan to somebody, you exactly do the same thing. So bonds are these fixed income investments, and let's say if government needs money to invest into infrastructure and more projects, what they will do, they issue bonds. Bonds means they will issue you a bond certificate which says that, let's say my name is Yogesh. So Yogesh is giving us 100,000 dirhams, and we will pay him yearly interest for the next 5 years. And after 5 years, this bond will mature, and we will give him his capital back. Until those 5 years, every year we will keep paying him, say, 2% interest, which is called coupon, right? So for me, I have given loan to the government. The government uses my money, and after 5 years, it pays me back with the interest every year, which I keep getting. So bonds are your fixed income investments. There are a lot of investors who do in bonds as well. You can always reach out to the financial consultants and experts to understand which bonds would be better, because bonds also have a certain amount of risk. Because governments, there are government bonds, there are corporate bonds or company bonds. uh, Obviously, company bonds are a bit riskier than government because in our mind we have the idea that government will not get defaulted, companies might can. But then something like Venezuelan bonds or Greek bonds may not be a good idea to invest because Venezuelan bonds just defaulted on their coupons or the interest rate. So be very careful when you're investing. Consult properly to the financial experts and then go for it. We have next asset class, which is real estate. And so everybody knows about real estate. And one thing which I want to highlight about this thing, real estate is not something which is the safest because this is a very common notion. People think, oh, I'll buy a house because it's tangible, I can see it. So, worst case scenario, if the value goes down, I have my house. But if you do it as an investment, please understand that it will always have the major economic risk. It is not away from the systemic risk which comes into the economy. Uh, there are a lot of properties over here as well, which are valued almost 40% down from their original value 8 years ago. So be very careful when you're investing into real estates. You can also invest into real estate funds by with the help of brokers, which can again diversify your risk into different areas. Now, last asset class which I wanted to discuss with you was stock index. Somebody had a question about Dow Jones and Nasdaq. So stock index is uh, we understood shares, we understood share baskets. Stock index is more on a macro level. So share basket are theme specific. Streaming, mobile, gaming, big tech, China tech, all very specific theme based. But when you look at stock index is it is like a health indicator of a country because stock market index, every country has a stock market index, whether it is Germany, whether it is France, India, every country, US, UK, they will have their respective stock market index. It's a hypothetical portfolio of investment holdings and it represents a certain segment of the financial market. So what happens is there are, let's say, 5,000 companies in US. Now I want to know how US market is performing. That means I have to value all those 5,000 companies together and I have to keep a track whether shares are going up or down. So instead of doing that, what I do, I've created a stock market index, which I call, let's say, Dow Jones. Okay. I'm specifying Dow Jones because somebody asked a question about Dow Jones. Dow Jones is a stock market index. It is also called US 30. Now, Dow Jones as a stock market index, what does it consist of? It tracks the performance of 30 large cap blue chip stocks, and these 30 are these are the companies of which you have heard the names. I'm talking about Apple, Microsoft, Boeing, JP Morgan, Citigroup, Johnson and Johnson, Pfizer, Walmart. These are the names which you have heard. So these are large cap, these are high market value companies. So US 30 or Dow Jones will track the performance of these companies, uh, and the way these companies perform, the value of Dow Jones will move up and down. So again, same. If you see, why would you invest into share basket? To avoid the risk of investing into an individual stock. Similarly, when you invest into Dow Jones or when you invest into any stock market index, you are basically diversifying into different sectors because a stock market index is not like a basket. It is not just one theme based. uh, US 30 or Dow Jones will have stocks which are related to, so entertainment stocks or media stocks like Walt Disney. They will have banking stocks like JP Morgan and Citigroup. It will have tech stocks like Apple and Microsoft. It will have airline stocks like Boeing. So a mixture of all these different sectors into one index. You can go to your platform and you can see here where to find the index. This is your product library. Refresh this, and this is where the index is. So now if you will see, every country has, I will zoom this for all of you so you can see it better. Remember a few things. One country can have more than one stock market index, and any company can be tracked by more than one stock market index. So if Dow Jones have Apple and Microsoft in the index, then any other US stock market index such as S&P 500 or Nasdaq may also track Apple and Microsoft. So what you see right now is the list of indices of different countries: Australia 200, Canada 60, France 40, Germany 30. Um, any guesses what the numbers by the end of the index denotes? Right over here on the chat. What are the numbers? What does these numbers mean? Spain 35, South Africa 40, Netherlands 25. Anybody has any idea? Okay, okay, okay. So I'm getting more and more answers. Anybody else? What do these numbers stands for? Australia 200, France 40, Germany 30. Okay, great. So yeah, absolutely everybody is right. The number of companies. How many companies are in those index? So if you see, there is Japan 225, there is Netherlands 25, which means the number of companies in that index. Okay, let's not call this a basket. Let's call this an index. Basket will keep it separately because they are more theme based. A 5G basket or a banking basket or an oil basket, right? Oil and gas basket with those kind of companies. This we call it a stock index. It have a similar concept, but then let's try to create a difference for our understanding so we do not get confused. Now on this platform also, if you see, if I only select country wise, let's say US, there are four stock market indices which are available for investments and trade. There is US 30, which I told you 30 companies. Then there is NASDAQ 100. So NASDAQ, somebody asked me the question that how pandemic affect the stocks in NASDAQ? Well, it did affect uh, initially, but then NASDAQ is a tech heavy index, which means out of these 100 companies, a lot of companies are into technology. And we all have seen that with the pandemic coming in, uh, whether it is Zoom technology, which is remote lifestyle, whether it is Amazon, which is e-commerce, or Facebook, which is social media, Netflix, which is video streaming at home, all these companies collectively gained a lot of value because of the pandemic. If you couldn't go out, you will sit at home, you will order stuff from Amazon, that's revenue. You will watch Netflix, that's revenue, right? You will connect everything on Zoom, so that's revenue for Zoom. So tech stocks did go up, and Nasdaq has been the most outperforming index uh, in last few months as compared to all other indices. Even if you see on the product library right now, this is 6 month performance, and you can see Nasdaq is up by 44%, while US 30, the large cap, is up by 22%, and the smaller market value companies, the small cap index, is up by 33, while S&P, the global benchmark, is up by just 26%. So Nasdaq actually outperformed S&P as well. Right? So now these, what you see are your asset classes. We discussed about, we started with why do we invest? We discussed about inflation. We understood the investment pyramid. We understood the risk of each and every asset class. So from the very beginning of a savings account uh, to moving to fixed income bonds, moving to real estate and blue chip stocks, moving to the trading in commodities, the risk and reward both increases, right? We understood the importance of forming a base in our investments and saving some money for the rainy days and rainy years. We discussed about a lot of asset classes, stock market index. We talked about stocks. We talked about commodities. We talked about currencies. Within commodities, we talked about energy-based commodities. We talked about agriculture-based commodities, precious metals, base metals. So, what next we are going to do tomorrow? We are going to discuss about how to trade in these commodities, how to execute orders, how to manage your risk when you are actually investing into these instruments, and how do you invest, how do you buy or sell. But till then, there is one thing which I need you to do. By the time, if anybody has any questions, I think there was one question which I was keeping for the last. I think I've already answered that. Let me just check this. So somebody asked me about penny stocks, the pros and cons. Uh, Penny stocks are the stocks with extremely low market value. May preferably, I think the market value is below $100 billion. And penny stocks have their pros and cons, but you have to be very careful when you're trading into penny stocks because these are not very big companies. Uh, they can move because these stocks are like sometimes 10 cents or 20 cents. So even a slightest of the movement, volume wise, can give you good profits. But then you are always exposed to a higher risk in such companies because since they are not very high market value, any movement not in favor might affect the financial of the company. So penny stocks are a bit more riskier. Somebody asked about, do we pay commission on each order? So every time you trade, a certain amount of commission is charged. Obviously, that's for the later stage. The idea for you right now is to understand uh, what kind of asset classes are available to invest, and how do we form an anchor in our mind when it comes to the prices. So I'm giving you this exercise for today, and hopefully I'll see all the people, or I will hear all the people tomorrow. Just take demo accounts from the people you're connected to here in Century. I'm sure everybody will be having a relationship manager. If not, just reach out to us and mention this query. I want you to have a demo account tomorrow morning, and till the evening 7 to 8, till we meet again, I want you to create a watch list and add all these instruments which we discussed. So it's very easy to create a watch list. You just go here and click on create a new watch list, and now you can just add product. So for example, if I say gold, you can add gold right here, gold cash, add amazon.com. You can add wheat, you can add euro and dollar, right? Just the way I'm adding right now. I want you to add. Do not try, do nothing for now. The assignment for tomorrow, you take the demo account from your relationship manager and add the products to the watch list. It can be any product, but you go to the watch list again, click on create new watch list. When you click on create new watch list, a watch list opens, and then you just have to click and add products. I hope it is a very easy process. If not, there's a one more way. You can talk to your relationship manager tomorrow morning, and he will tell you how to add a product on watch list. You can ask him over the phone, talk to him over Zoom, or have a small meeting, and he will explain you how to add on the watch list, right? So this is it about the asset classes today. We learned how many kinds of financial instruments are available overall, where you can invest, where you can trade. Tomorrow when we'll meet, we'll try to understand how do we buy, sell this, how do we manage our risk, how do we try to minimize the loss, and also on an average basis, how much a commodity or a currency or a stock market index moves. So you will basically know that, okay, if this is Dow Jones and moves $300 a day, then how much should I buy, or how much should I uh, do not? So if gold moves, say, $25 a day or $20 a day, then you're buying 10 ounces, you know that you can make $250 profit, or you can lose $250. So the average true range of the any asset class is really important to know, because it kind of sets an anchor to your mind that how much prices can move, and you can take quantities and manage quantities accordingly, right? So once again, thank you so much for being a part of this. I welcome all of you into Investor Education Week, and I hope that you have enjoyed this session. Very quickly, before you leave, please do review us on Google if you like this session. Please put your feedback. Your feedback is really important to us. What you liked about it, what you didn't like about it, anything. We'll surely work on this. If you want to have a one-on-one training session with me, just talk to your RM, and we'll have one-on-one training sessions as well. I would prefer once this entire training sessions are over till Thursday. Till then, just come every evening 7 to 8, and we can have definitely a more and more sharing of information and knowledge, and where you can ask more and more questions. So, guys, thank you so much once again for spending your time. My name is Yogesh. Uh, be home, keep yourself safe, but at the same time, please keep yourself invested. You can see last 6 month performance of so many companies have been in positive and in green. And this was the time when pandemic happened, markets came down, and then it went up. So just you just need the right consultants, right guidance, and just hang on to it, learn more and more, be more informed and updated, and over the period of days will understand different ways to manage risk, and different ways to invest. So once again, thank you so much. uh, Please take care of yourself. We'll meet definitely tomorrow same time, but do not forget to take demo accounts and create a watch list. Once again, thank you so much.